Hello guys, welcome back. In the previous video, we learned how to read the body, wicks and range of a candlestick. Now we are going to look at some common candle shapes that you regularly see on a chart. But before we start, I want to make one thing very clear. Don't memorize a candle's name and immediately take a trade whenever you see it. The candle's location is more important than its name. Okay, so let's start with the doji. A doji is a doji is formed when the opening and closing are almost the same. You would have seen this many this type of candlesticks. Price may move up and down during the candle, but by the time it closes, it comes back close to where it opened. So what does that tell us? It tells us that neither buyers nor sellers made much net process during that period. Buyers tried to move price, sellers also tried to move price, but in the end, price closed nearing the opening level. Many beginners see a doji and immediately think that the market is going to reverse. That's not correct. A doji only shows balance or indecision during the particular candle. It doesn't automatically mean reversal. Now, this one is called a long legged doji. Here, the upper and the lower are much longer. That means price moved strongly in both direction, but it still closed near the opening price. So there was more activity and volatility, but neither side maintained control. So I'm actually, thinking and saying whatever I'm saying. So yeah, sometimes you need to, understand. Yeah, let's continue. Next, we have the spinning top. A spinning top has a small body and noticeable upper and lower wicks. I won't go much technical actually from now on, but yeah, the open and the close are not exactly the same, so it's a perfect doji, but the body is still small compared with the candle's total range. This also connects that suggests that buyers and sellers were competing without one side making strong progress. Let's say the market is moving sideways and we see a doji. Does that give us any specific information? Not really. The market was already uncertain, so another decision candle inside the range is normal. But suppose price has been moving up strongly and reach a important resistant area, then a doji forms. Now the you would have seen many times, price is going up and then the trend changes, but then the topmost candle is most of the time is a doji. Now the candle becomes more interesting because the strong buying movement or the selling movement has temporarily stopped at an important location. Still, we don't immediately sell. We wait to see what the next candle does. If the next candle moves strongly downward and closes below the doji, that gives us more evidence that sellers are becoming active. So remember, a doji means balance. The location on the candle tells us whether the balance actually matters. Now let's look at the hammer. A hammer normally has a small body near the top and a long lower wick. Hammer. Just look at the story inside the candle. Price was moved down at one point. Sellers were in control and pushed price much lower. But buyers entered from the lower area and pushed price back up before the candle closed. That recovery creates the long lower wick. Now, is every candle with a long lower wick a bullish hammer? No. So, for it to work as a possible bullish reversal pattern, it should form after price has been falling. If the same candle appears randomly in the middle of sideways market, it doesn't carry the same meaning. Imagine a stock falls for No. Imagine the stock falls from 500 rupees to an important support near 470. Price moves below 470 during the candle, but buyers respond and push it back above the level before the candle closes. That creates a hammer like candle. Now we can say that lower price was rejected, but we still need confirmation. For example, the next candle may move above the hammer's high and close strongly. That would show us that buyers are actually following through. Inverted hammer, right? So next we have the inverted hammer. This has a small body near the bottom and a lower upper wick, a long upper wick. Sorry, it is not a lower upper wick. Sorry. It is a long upper wick. During this scandal, buyers tried to push price higher. They couldn't hold the entire move, so the price came back before closing. At first, this may not look very bullish because of the upper wick, but after a decline, it can show that buyers are beginning the challenge the sellers to challenge the sellers. Again, confirmation is important. If the next candle moves up strongly, then the buying attempt became more meaningful. If the price falls instead, the pattern and continues downward, and the setup has actually failed. So don't trade only because the candle looks like a hammer. We need three things: the correct candle shape, the correct the correct location after a decline, and confirmation that buyers are actually taking control. Okay. Shooting star and hanging man. This is my favorite candlestick actually, This I used to say this, I used to feel a bit, nice. Okay, now this is where normally people get confused. Okay, let me put my phone into do not disturb so that it won't. Yeah, this is when people get confused. The shooting star looks almost the same as an inverted hammer, and the hanging man looks almost the same as hammer. So, why do we have different names? The answer is location. A shooting star forms after price has moved upward. It has a small body near the low and a long upper wick. You see, during the candle, buyers pushed price higher, but they couldn't maintain the higher price. Sellers reacted and pushed price back down before the candle closed. Because this happened after a upward move, it can warn us that buyers are losing strength. Imagine a price is rising and reaches a previous resistance. It moves above the resistance during the candle, but then falls back below it and leaves a long upper wick. That tells us that the market explored the higher price but couldn't hold it. Now, do we immediately sell? No. We wait for confirmation. If the next candle and if the next candle moves lower and closes strongly, yeah, if the next candle moves lower and closes strongly below the shooting star, that shows sellers are gaining control. Let's look at the hanging man. Oh shit. Yeah, let's look at the hanging man. Its shape is similar to hammer, a small body near the top and long lower wick. But a hanging man forms after price has moved upward. During the candle, sellers manage to push price sharply lower. Buyers recover the move before the candle closed, so the candle may not look very bearish. But the longer lower wick tells us that strong selling appeared during the period. For it to become a proper bearish warning, we want the next candle to confirm the weakness. If the next candle closes lower, especially below the hanging man's body or low, it suggests that sellers are, you know, uh, being beginning to take control. If price continues moving upward instead, then the lower hanging man didn't produce a reversal. Let's simplify all four candles. A hammer and a hanging man have similar shapes. The hammer forms after a decline and may warn of a bullish reversal. The hanging man forms after a advance and may warn of a bearish reversal. An inverted hammer and a shooting star also have a similar shape. The inverted hammer forms after a decline. The shooting star forms after an advance. So, don't focus only on shapes. First, check what price was doing before the candle formed. Yeah, there's one more important thing in this whole course. These candlesticks pattern you won't be using in any further. You'll just be using, okay, like, yeah, okay, this is a good candle. Okay, fine, that's it. You won't be taking trades according to a candlestick. You will have different chart patterns. I mean, not you won't even be trading chart patterns. You'll understand support and resistance further, and then you'll be continuing everything. So for now, pause the video and open any chart. Try to find one doji, one candle with a lower, long lower wick, and one candle with a long upper wick. Before naming the pattern, ask yourself: was price moving up and or moving down or moving sideways? Did the candle form near resistance support, near a resistance or a support? And what did the candle do next? This is why, I mean, like, this will train you to read the story instead of simply memorizing names. So that's it for this video. We learned that a dodgy and spinning top show balance or indecision, but they don't automatically create a reversal. We also covered the hammer, inverted hammer, shooting star, and hanging man. The main point to remember in this is the simple candle shape can have a completely different meaning depending on where it forms. In the next video, we'll look at multicolor, multi candle patterns such as bullish and bearish engulfing pattern, morning star and evening star. Uh, prac- Practice finding today's candles on a real chart, and I'll see you in the next video. Thank you.